Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 24th of April 2019. My name's Darren Sinden, and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, as ever, let's kick off with a look at the overnight changes and price moves to be aware of. First of all, further weakness in the Australian dollar versus its US rival. The Aussie currency dropping by another 0.92% over the course of the last 24 hours and bringing its 7-day losses to 1.97%. The New Zealand dollar not too far behind, down by 0.5% over the course of the evening and early morning sessions. And that brings its weekly fall to minus 1.53%. So weakness there again, as we see. We'll come to some of the reasons for that a little bit later on in the video. Elsewhere, the dollar was also making gains against the Canadian dollar and the Mexican peso. And again, these daily losses for those two currencies just really reflecting the weekly trend and adding to the losses suffered there. The dollar also reasserting itself against the South African rand, and it's taken 2.37% off of the South African currency, and really sort of overturning that stronger move below 14 that we saw in the rand just over a week ago. That now seems like a bit of a distant memory. Dollar index for its part, however, broadly unchanged, down by 0.01% over the last 24 hours, and so marking time ahead of some key data later in the week. Okay, what's on the calendar? Events that may move the markets today. Well, we've already had a series of inflation prints out of Australia, including the RBA trim mean and CPI data for Q1 2018, and we'll take a closer look at that. Sorry, Q1 2019, I do apologise, and we'll take a closer look at that data a little later on in the video. Earlier, we also had all industrial activity index data out of Japan for the month of February and leading economic index data for the same month as well, both of which were a little bit on the weak side, I would suggest. To come then at 8 AM this morning, we will have the IFO expectations, business climate and current assessment survey data out of Germany for the month of April, so a chance to really see how German economy watchers and those in business in the country are feeling about the prospects for Europe's largest economy. At the same time, we'll also get a chance to look at the EU's economic bulletin, a summary of how they see the Europe-wide economy as performing in the current month and looking forward. And we'll also have some further survey data, the ZEW survey data expectations index for April out of Switzerland. Fast forward half an hour to 8:30 and we're back in the UK for public sector net borrowing data for March. Government borrowing figures have actually been improving over recent months. It'll be very interesting to see whether they can continue to do so despite obviously the chaotic scenario around Brexit. And then we pause until 1400 hours when we cross over the Atlantic to Canada for the Bank of Canada's interest rate decision for the month of April. And then 15 minutes later we shall have the Bank of Canada's press conference. No change expected today, but it will be interesting to hear what Governor Pollers has to say about the factors and metrics that he and his colleagues at the Bank of Canada are looking at in determining the next move in Canadian interest rates. And then we take another significant break until 23:50 this evening when we cross over to Japan for foreign investment in Japanese stocks for the week of April the 19th. Okay then, breaking news and comment that's caught my eye overnight. And first of all, Australian Q1 inflation has fallen to plus 1.3%, well below market forecast of 1.5%, and the prior quarter's read of plus 1.8%. The Q1 print was the lowest print since the third quarter of 2016, and as we've seen, the Aussie dollar weakened further on the news. Remember that the RBA said that a rate cut was likely if it saw a combination of rising unemployment and falling inflation, and thus far, I'm afraid that's what we're on course for. Meanwhile, US Treasury Secretary Mnuchin and the Chief Trade Negotiator Lighthizer head back to Beijing today to continue US-China trade talks with hopes of a deal, of course, rising once more. And staying in Asia, North Korean leader Kim Jong Un arrives in Vladivostok today for meetings with Russia's President Putin. The question, of course, is will he have more success with Mr. Putin than he did in his last summit with Donald Trump? And speaking of the US, Boeing, Microsoft, Visa and AT&T are among the stocks that are scheduled to release their Q1 earnings later today. Okay, food for thought and something for you to take away into the trading day and beyond. We get our first look at US Q1 2019 GDP on Friday, and there seems to be little doubt that the US economy is slowing when compared to its performance from just over a year ago. The question is now, by how much? Well, surveys and nowcast models try to predict this data, and the average prediction from these sources is for growth of plus 1.9%, just ahead of the market expectations of plus 1.8%, but that's significantly lower than the 2.2% growth we saw in the first quarter 2018. And the chart to the right hand side here, sourced from the Capital Spectator, shows us the prior year's performance quarter by quarter and the predictions from a series of surveys and nowcast data for the forthcoming data on Friday. The median nowcast, as we can see here, at 1.9%. There are some outliers, including the GDP Now survey and nowcast model, which is predicting 2.8% currently. So it'll be very interesting to see how that data does actually materialize on Friday. Okay, it's risk warning time. Please do read this risk warning thoroughly. Trading CFDs and foreign exchange on margin can be a risky business. If you're unsure about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative. And as I say, do take the time to read this risk warning thoroughly, please. Thank you for your time today.